What's up, everyone? Rose Brown, the accountant therapist here, and welcome to another week of Tax It Tuesday. We're in week 9, just about, and today is, of course, March 11th. And this live here is very timely because of the week that we're in, or the time the due date that's coming up pretty much, right? So I'm going to be touching on things concerning business entities and, of course, talking about it from a tax perspective, elaborating on the tax implication of the different types of entities. So this is going to be one of those lives that you definitely want to make sure that you go ahead, grab your paper, your pen, your notepad, your computer, whatever you use to take notes, because this is going to be very informative, if you will. And of course, if you ever had questions concerning starting a business or what entity is right for you, you definitely want to make sure that you jot down a lot of notes that are being discussed on this live, okay? With that being said, I am the CEO of Brown's Advisory and Accounting Firm, where we provide an array of accounting services. You hear me say that every week, but that really does include not just taxes from an individual business perspective, but also bookkeeping, payroll, business formation, all those good stuff right under the umbrella of accounting. Right. And if you ever need to connect with me for, let's say, an initial consultation, you can do so through our website at www.brownsfca.com, or you can send us an email at info@brownsaaf.com. Before I jump into this week, I do want to quickly recap what we talked about last week, right? So last week, I talked about I addressed, I don't know why I keep saying that, but I addressed the question, what can I write off on my tax return? And it really looked at it from an individual and a business perspective, where for individuals, the tax code is not written for you. So there's not a ton of things that are at your fingertip. But when you're a business, the sky's the limit almost, right? So if you've not yet seen that video, definitely check it out. And of course, let me know if you have any questions about it, okay? All right, so this live here, we're talking about business entities and their tax implications. As I mentioned, make sure that you're taking notes, because it's going to be, I'm going to say juicy, but I love talking about businesses, so it just makes sense for me, right? So the focus today is going to be on sole proprietorships, single member LLCs, multi-member LLCs, partnerships, S corporations, C corporations. And here's the thing, before choosing any one of these entities to begin operating under, it is wise that you have a consultation to assess which entity would be best for you, right? Because at the end of the day, the entity that you choose to operate under will determine the impact of your taxes and method of compensation, like how are you paid type of thing, right? So it addresses questions like, and these are very common questions that I get all the time. Someone who's maybe been in business or is looking to establish themselves as a business owner, they would ask questions like, hey, how should I pay myself? When is my business taxes due? When is my business return due? And I want you to understand that those are two different things, right? Your taxes are generally referring to your income taxes that are owed or due. And then your tax return is the actual filing of the return, right? And folks may ask, hey, do I have to pay a lot of taxes? Now, as I mentioned last week, it depends, right? When it comes down to choosing the best entity for operating a business, it is incredibly important that you do tax planning, right? That's the only way you're going to kind of mitigate your tax liability. You can't control what you don't know how to control, essentially, right? And another question is, hey, I don't want my business activities reflected on my personal tax return, right? So your entity really determines a lot of what you will see when you file your tax return, how it impacts you, if you go to get a loan, a home, all these different things, right? So you want to make sure that you're having a consultation. Don't just set up that entity all by yourself or just go through Zen Business to get it done. Make sure that you're talking with someone to ensure that, hey, this is the best thing for me based on my situation, right? Because you're going to hear a lot of people saying, oh, I started an LLC, I did this, I have a corporation. Why do they have it? What purpose is it serving for them based on their needs? And really, when you establish an entity, don't just look at where you are, right? We're looking at where you want to go, all right? Now, in addressing business entities, right, and the tax implication, one of the first things that I do want to help us to understand, and we've talked about this in the past, but I do want to reestablish these terminologies as I'll be talking more about them later on, and that is self-employment taxes, right? No, self-employment taxes is made up of FICA, and FICA is made up of your Social Security and your Medicare taxes. So ultimately, when you are operating certain types of entities, you will be subjected to self-employment taxes, right? And that self-employment tax can be controlled in a sense, or all of it will be taxed for tax purposes, right? And then of course, you want to make sure that depending on your entity, you're reevaluating whether or not, hey, am I supposed to still be here based on how much money I'm making, right? Because the more money you're left with at the end of the year, referring to net profit, the higher your taxes are going to be. So again, you're going to always hear me note that tax planning is critical for you. Okay. And outside of the self-employment tax aspect, another piece that you really want to be cognizant about is what is a flow-through entity, a pass-through entity. I've talked about this a lot in the past, but I really want to bring it back as we're talking about entities here. Now, a flow-through entity, you can also say a pass-through entity. This is when the activities of the business flows through to the individuals who own the actual company. And that's to say, hey, the business itself is not liable for any income taxes, right? And that's a generally, it's not liable for its own income taxes. It's when the individuals receive what is referred to as a Schedule K-1, that's when they begin to see, hey, there are taxes due as a result of the business activities, but the business itself is not responsible for those taxes because it shows up on your personal income tax return. It becomes a personal tax liability and it's not a business tax that is due, okay? All right, so what I'm going to do here is I'm going to go through the different entities that I mentioned earlier, and I'm just going to talk through what the different areas of them are that you want to keep in mind from a tax perspective, right? And I'm going to go ahead and start with the sole proprietorship and the single member LLC. Now, a lot of people are like, should I become an LLC? What should I do? Now, you have to understand the big difference between a sole proprietorship and a single member LLC is the liability protection, right? When you're a sole proprietorship, you're pretty much open to lawsuit, anything that could happen, right? So if somebody, I don't know, there's something, you do something, they feel offended, they sue you, you don't have an LLC, they can come directly to you, right? When you have the single member LLC, you have that liability protection, right? But that's only if you don't pierce the corporate veil. Now, I won't talk too much on the corporate veil because that's a whole nother ordeal, okay? So we'll leave that where it is right there. Now, with regards to the sole proprietorship and the single member LLC, the reason why I paired them together is from a tax perspective, they are seen as the very same thing. They're actually referred to as disregarded entities. Now, when you have disregarded entities, that's to say, hey, the activities of this business is not reflected by itself, not on its own, but instead it's reflected on my personal tax return, okay? Now, when you have a disregarded entity like the sole proprietorship and the single member LLC, that is filed as part of your personal income tax return. And it's reflected on what is referred to as a Schedule C. Some of you may have heard a Schedule C quite a bit in the past. If you have any self-employed activities, that's generally where your income is reflected, or the activities of your self-employed is reflected. It can never be filed by itself. So I've had in the past where someone came and said, hey, you know what, I have a business, but I already filed my personal tax return. And of course, I ask a question, what type of entity are you? And they say, hey, I'm just a single member LLC. Well, you know, once I hear that, we have to amend your personal tax return because we can't just send a Schedule C to the IRS. It doesn't work like that. We have to file it as one return, right? Which means the time that your personal tax return is used when your Schedule C or business activities is due, right? And every year it's generally the same thing unless it falls on a holiday or a weekend, and that's going to be April 15th, right? And that's to say, all my folks out there who have not yet filed their personal income tax return, you have just about a month, right? Now, within a single member LLC, the owners are referred to as members, okay? And this is an entity that is subjected to self-employment taxes. Again, the higher your net profit, the more taxes you will generally pay. So you want to kind of keep that in mind. Okay, so now that we've cleared the sole proprietorship and the single member LLC, we're going to go ahead and jump into a multi-member LLC and partnership. Now, the reason why I pair these two together is because really they're taxed the same, right? When you have a multi-member LLC, that's to say, hey, I have an LLC and there is more than one member that is a part of this LLC, right? So two or more individuals causes this to be a multi-member LLC. And a multi-member LLC is taxed as a partnership for tax purposes, right? Now, the members can be referred, or the owners can be referred to as members or partners, depending on how they set it up, right? So if it's a multi-member LLC, we have members, right? If it's a partnership, we have partners. So you want to kind of keep that in mind. Now, when you file a tax return as a partnership, remember, well, I didn't say this part yet, but a partnership or a multi-member LLC, they are a flow-through entity, which is to say the business itself is not responsible for its own income taxes, right? It is when you begin to see those activities on your personal tax return that you now begin to have tax liability. Now, what that looks like is the members or the partners will receive what is referred to as a Schedule K1. Now, that K1 is reflecting a percentage of the business's activities, and oftentimes that's the interest that you own within that entity. So let's say you are a 25% owner and the business had a net profit of $100,000. You're going to see 25% of that net profit on the K1 that's going to show up on your personal tax return. So if you are someone that is involved in a partnership or multi-member LLC, you definitely want to make sure that one, you're not doing your tax return by yourself. And two, as your tax return is prepared or before it's filed, you connect with the accountant to ensure that you understand everything that is taking place on that tax return, right? You want to make sure that whatever you sign off on, you are in agreement and understanding of that. Right? Now, with a multi-member LLC and a partnership, the due date is a little bit different, right, from the sole prop and the multi-member LLC. The due date here is March 15th, which again, like I mentioned before, this is a timely live so that I can bring to your attention pretty much, hey, there's a due date coming up. You want to make sure that you don't miss it. The IRS do not play when it comes on to missing deadline. I mean, they're very strict, right? March 15th is generally the due date. However, this year, the due date is going to be the 17th because the 15th falls on a weekend, right? So they have a little bit of time, but ultimately you want to make sure that even if you don't get to file the tax return, you certainly go ahead and submit an extension, okay? Now, a multi-member LLC and a partnership, they are subjected to self-employment taxes. So similar to what I discussed about the single member LLC and the sole proprietorship, you have self-employment taxes at work here. And again, this could be a very high amount depending on how high the net profit is. So ultimately, again, we want to revert to tax planning to ensure that if you are able to mitigate any portion of your tax liability, you do so ASAP, right? Year over year, this is going to add up pretty much, right? I've seen it in the past where I've had conversation with clients saying, hey, you know what? I think it's time for you to reassess the entity that you're operating at. And you're like, yeah, Rose, yeah, I'm going to do it. And then they begin to owe more and more and more. And then they come to the realization that it is absolutely necessary to have this conversation of reassessing the entity. And you want to do that as often as needed if you're really looking at it from a tax perspective. Right? Now, we're going to shift gears and talk about corporations. Now, there are two types of corporations, right? So you want to ensure that you understand the difference between the two. There's an S corporation and there's a C corporation. They are not the same thing, okay? And I'm first going to talk about the S corporation because it's a little bit different in a sense from the C corporation, but similar to the partnerships and the LLC from a tax perspective. So with the S corporation, right, this is not a legal entity. it's a tax election, which is to say you can't just set up the company right away as an S corporation. You must pretty much ask the IRS, hey, can I be taxed as an S corporation? And I like to say, please. So this is done on what is referred to as a Form 2553, right? So that's the document that is used to request S corp status. Right? In requesting S corp status, you begin to operate differently, right? The references, the terms, everything kind of changes in a sense, right? And then S corporation is a flow-through entity. So remember I talked about a flow-through entity where it's the business itself. So if you have an S corporation, the S corporation itself is not liable for its own income taxes, I mean, but instead it's when the activities flow to you personally that you begin to see that liability show up on your taxes. Now, the S corporation, similar to the multi-member LLC and the partnership, they have to file their own tax return, right? So there's a tax return independent of the personal taxes, but what happens is you get that Schedule K-1 to reflect on your personal tax return. Right. And at this point, we're now referring to folks as shareholders, right? So shareholders are given that Schedule K-1 so that they can reflect it on their tax return. Now, similar to the partnership and the multi-member LLC, the tax due date here is March 15th. Again, for this year, 2025, it's due March 17th because the 15th falls on a Saturday. Okay. Now, the big difference here, and the S corporation is actually a rather popular entity, but it's also very strict. So you want to be careful, not just I'm going to elect S corp status. You need to understand how it works, flows, operates. You can put all the words in there before you begin to establish this particular entity, right? So with the S corporation, it's not subjected to self-employment taxes, which is why quite a few people kind of run to that entity, right? But at the end of the day, you have to make sure that you're receiving compensation appropriately, right? Meaning the correct method as well as the appropriate amount. And this is something where before I can't even go any further talking about it as much because we need to talk about your industry, the work that you do. You know, tax planning really comes into play here when you begin to talk about changing your entity structure. Right. So with this entity here, the S corporation not being subjected to self-employment taxes, if folks are not careful, they can find themselves in a situation where they're evading taxes. And of course, if you're evading taxes, unfortunately, it could lead to some jail time, a lot of fines, if you will. So you want to make sure that if you are operating an S corporation, you understand every aspect as it pertains to compensating yourself. Because if you don't compensate yourself properly, the IRS can easily reclassify what should have been your actual compensation and assess penalties upon penalties and interest. So this is something where if you can avoid it, absolutely avoid it, right? We don't want to be entangled with the IRS. All right, so that takes care of it for the S corporations. Let's go ahead and talk about the C corporations, right? Remember, they're different. S corp is different from the C corp. Now, the C corporation is a completely separate entity from your personal tax return. This here is not a flow-through entity. So this is the only entity that is not a flow-through or pass-through entity, right? This is to say this return is filed and whatever taxes that are assessed, the business itself is liable for it. The business itself pays for it. Whereas the other entities that we've talked about thus far, it is the individuals that own the company that pays for those income taxes. So you can see here, this is one of those things where someone may say, hey, I don't want my business activities on my personal tax return. Well, this is the only way you can go with the C corporation, right? Or someone may say, hey, you know what, I want to see the business activities on my personal because it has a loss or something like that. Hey, we want to have a different type of compensation, right? So you want to make sure, again, you're inquiring of the right professional in terms of which entity is best for you. It's not right or correct. I would like to say best for you. Okay. Now, with regards to the C corporation, this return here is due on April 15th, right? So any businesses operating under this entity have a little bit of time, right? A little bit over a month. Now, one of the good things about a C corporation is the fact that it has a flat tax rate, right? So it's a flat tax rate of 21%. So regardless of what's happening, for the most part, how high the net profit is, you're seeing that net profit of 21% for income tax purposes, right? Whereas on your personal return, you're starting from 10% all the way to 37%. So you can see how easy it is to pay a lot of taxes on your personal return, rather than the C Corp if you're being strategic, right? So none of these entities you establish unless you have put a strategy in place. Okay. Now, the C corporation, fortunately, is not subjected to self-employment taxes either, similar to the S corporation. Okay. Now, the one thing that causes a lot of folks to literally run from a C corporation is the fact that you may be subjected to double taxation. Now, double taxation is when taxes are assessed twice from an income tax purposes. So in the case of a C corporation, taxes are assessed at the corporation level, and taxes may be assessed at the individual level. Now, the only time the individual level comes into play is if you take dividends, and that's to say you took a distribution from the C corporation. So when you have a C corporation, there are different ways that you can compensate yourself, similar to the S corporation as well. But you have to make sure that whatever your compensation is, it's reasonable, right? So that kind of complete tonight as we talked about the different types of business entities and their tax impacts. So you want to make sure that with each entity, you are assessing whether or not it's best for you, right? And some folks may have multiple businesses and they want them to intertwine. Listen, you need a tax planning strategy session if you're thinking along that line, right? And make sure that you're paying attention to the due dates. Today, as I mentioned before, is March 11th. The S corporation, the partnership, the multi-member LLC, those tax returns are actually due on Monday. And if you are not ready to file, or you just don't have all your ducks in a row, submit an extension. It will not hurt. What will hurt is if you miss this deadline and the IRS penalizes you. We just want to stay away from anything of that sort with the IRS, okay? And again, make sure that you gain understanding before you make this decision, because this is a big decision, right? You don't want to establish one entity and then decide later on, you know what, I want to change, especially if you're looking to keep the business consistent, all these different things. Be strategic when it comes down to choosing the right entity, okay? With that being said, my name is Rose Brown, also known as the Accountant Therapist. And if you have any questions, please let me know. Reach out. I'm always excited to educate, share, talk really about business, accounting. It's just my love. What can I say? Nevertheless, I will see you next week for another Tax Tip Tuesday Live.